Joseph Stiglitz is a Nobel Prize-winning economist. He's author of The Price of Inequality, How Today's Divided Society Endangers Our Future. And Frank Rich is New York Magazine's writer-at-large. His latest column is called Lipstick on an Elephant. It looks at Republican rebranding efforts and the future of that party. Gentlemen, thank you both for being here. I very rarely talk to two people at once, but I really wanted to with you both. Professor Stiglitz, I want to start with you. Why is this happening? Why do we have such pronounced inequality in the face of what looks like some bottom line significant economic success?
Well, what's going on in the stock market right now is very simple. The economy's not doing very well. That's why the Fed is keeping interest rates very low and looks like it's going to keep interest rates very low. So that means the cost of capital to firms is very low. Unemployment is high. That drives down wages. And the two of those together means high corporate profits, as your chart showed. So in a way, what we're seeing here as the interest rates low, stock market goes up, bonds are not doing very well. Older people, for instance, who depend on interest from T-bills, doing terribly. So all of this is a picture, actually not of success, but a picture of an economy not doing very well. And we look at those corporate, the profits of American, the blue chip that constitute the Dow. Many of those, most of those have a large fraction of their profits overseas. And China, emerging markets are doing relatively well, much better than the United States. And so they could be doing well by creating jobs abroad, but meanwhile, the American economy is not doing well.
Frank, whether or not anybody tried to make these divergent outcomes happen, is the outcome that we've got with high corporate profits and American people by and large not sharing in it at all? Is this a predictable outcome of the kind of policies that we have pursued?
Yes, it absolutely is, and it seems to worsen by the day. We have a government, in both parties, I might add, that's sort of stacked towards corporate welfare, breaks for corporations. Republicans take a looser line than the Democrats, but just in today's New York Times on the front page, that investigative piece that showed state and local governments in blue states and red states are floating tax-exempt bonds, not to underwrite public works. I mean, some of them do underwrite public works, but Goldman Sachs and Bank of America office towers. The Chevron Corporation, which had a profit of well over $20 billion last year, one of the most successful companies as measured by the bottom line in the world. We have governments, our governments, local and state and federal, just marching in lockstep with this corporate America and sweetening the brakes for them at every step of the way.
And they are described as job creators. When we're not just talking to wealthy people, we're talking about even corporations as job creators, that they need to get so much policy preference because that does redound to helping the average American by their creation of more jobs.
It's not working.
There's no connection between those two.
No, it's absolutely no, absolutely. And one of the things, you talked about who owns all those shares that are doing very well. Yeah. One of the striking things is in the last third of a century, 97% of the increase in capital income went to the top 5%. 97% went to the top 5%.
Wow.
So, that chart that you showed how it's concentrated, if you look at the capital income, it's much more concentrated. Let me give you another number that shows how bad things are. In the 3 years, 2007 to 2010, the median income, wealth, that's the wealth of those in the middle, in the United States declined by almost 40%. So while the shareholders in these companies are doing very well, most Americans are seeing their wealth diminish.
Could this be fixed by policy? Could this, Frank, I'll ask you, are policies that could fix this being debated? And Professor Stiglitz, do you see the U.S. government as having policies within its reach that could make a significant difference?
I don't see any policies except around the fringes that are being debated. It seems to me completely status quo, and in a way, what you talked about at the top of the show about this dysfunction in Washington is such a sideshow. Not only is it dysfunctional, incompetent, and beside the point, as you said, everyone's punching themselves in the face, but it's almost like bread and circuses distract people from actually discussing and debating policies that really neither party wants to put on the table, because essentially they have the same corporate backers. The smartest corporations in American politics are those that give to both parties. And so, yes, we have a little bit of Wall Street reform. We have talk about tax reform, but we're not really debating tax reform. We're just in gridlock.
If we had the political wherewithal to get there, are there policies that could make a difference?
Absolutely. In fact, in the last chapter of my book, I described 21 policies that could really make a very big difference. Let me just give you one interesting one. Switzerland's thought to be controlled by, wealthy people, just had a referendum, and that reflects very much the views that you gave in that chart. They voted to cap bonuses. They said where bonuses have gotten out of control. We know that we are a place where people go with wealth, but we think it's gotten out of control, even in our country.
And then all the corporate executives fled Switzerland in terror, right? Now none of them live there anymore?
So that's exactly the point. We could change corporate governance rule, say, would they have say and pay? Should the corporate leaders are taking an increasingly large share of the corporate pie for themselves, leaving less for workers. Financial sector, all those abuses that went on in the financial sector was moving money from poor and average Americans up to financial executives. Monopolies, monopolies make money by contracting output, not by making the size of our national pie bigger. Education, if most Americans do well, it's going to be through increasing productivity, but we're underinvesting in education. So you look at the tax laws in the United States, we tax speculators at less than half the rate that we tax people who work for a living. Now, when you do that, what do? You encourage gambling and speculation. You don't lead to a stronger economy.
Frank, as we pivot sort of from policy toward both sides already looking at 2014, this president has a record of overseeing spectacular gains in corporate profits and no gains on the inequality issues that he talks about so much. Is there an opening for a Republican populist here that the Democrats should be worried about from the right, or should they only worry about their left flank on this?
I wish there were competition in the political marketplace and they could be worried from the right. Yes, there would be an opening for a Teddy Roosevelt, that kind of Republican populist. But look at that party. I mean, they don't even know how to find the key to the men's room at this point. So they're not going to muster a strong challenge. It's interesting. A few conservative pundits are talking about policies that might benefit the middle class, serious tax reform, but as they themselves admit, they don't have any champion in the political arena to fight for these.
But one of the problems of the gridlock in the United States is the Tea Party movement. And one of the reasons for the Tea Party is anger, I think, over the problems of inequality. What they're saying is the government is helping the bankers, and look at what's happening to our wages. Well, so it's understandable that way.
I've long felt that the Tea Party and the Occupy movement, even though they hated each other, were two sides of the same coin, and both reflected that anger. And neither party has addressed that anger.
Exactly, and they're both exploiting an opening in both parties to try to make progress on those issues. Nobel Prize-winning economist Joseph Stiglitz, New York Magazine writer-at-large Frank Rich. Thank you both much for this discussion. Professor Stiglitz, will you come back and talk about the book again when it officially comes out?
Yes.
All right.